Alright, let's check out some trade examples. We'll use one from the indices and we'll use one from equities so we can kind of see where we're positioned, how we work out our profit and all those kind of things that go in with this. So let's say, for example, now, very short-term trade on the Dax. This is the chart, 1 minute chart. We've kind of decided that, Dax has run out of puff a little bit here. We're going to take a speculative long around this level. It hasn't gone much lower, and we're going to look for a little bit of a pop-up and trying to close it for a little quick profit during the day. So how do we structure the trade? How do we position the trade? Let's walk through it. So to go long, obviously going long means we're going to profit from an up move in whatever asset we're buying. If the market then moves lower, we're going to lose money. So we're looking to go long because we think the market's going to go higher. So we buy the German Dax. In this case, we get filled at 10,596.8. And we decide to take a stake of 50 CFD contracts. So what is that telling us? It's basically saying for every point move up in the Dax, we're going to make 50 euros. And don't forget, it's in the currency of the underlying we're trading. If it was the Dow, it'd be dollars. If it's a FTSE, it would be pounds. But we're trading Dax, so we're in euros at the moment. So that's the price we buy at, 10,596.8. And this is the kind of quotes that you're going to get on the platform. Is they're going to be down to the 10th, just purely to give you a bit of a granular and a bit of a better quote and a bit more of an accurate quote. I mean, sometimes it might just be 10,597, but most of the time they're going to go a little bit more accurate than that. But also, it helps us understand and see exactly how it's calculated, even when it becomes a little bit more complicated with an extra decimal point in there. So what do? The market moves up. We think, thanks very much. Let's sell this now. A little scalp trade. Weren't looking for anything crazy on this one. We closed the long trade. And to do that, we use a sell order. And a sell order is going to be to sell those 50 CFDs that we bought back earlier at 10,596.8. And this time, the price the broker is offering us to sell at is 10,613.54. So we sell the full 50 CFDs. And the result on that is a nice profit. We have made 16.74 points on that. And we can the easy way of calculating it is we can multiply that by 50 euros because we've got 50 CFD contracts. We know the value of one CFD contract is €1 per point move. So 50 CFD contract is going to be 50 euros per point move. And we can just multiply that by the profit we've made. And that's going to give us a total profit of 837 euros. Now remember that with the indices, we do not have to pay an additional commission on that. The commission is all wrapped up into the spread, so that 837 euros is our profit. Now, vice versa would happen if, for example, we had sold the Dax down there and we bought it up here, so we were wrong on the trade had gone against us, or we bought it and the market gone lower, and that had been minus 16.74. Obviously, we just multiply that by the stake that we had, and we'd have a loss of 837 euros. So let's look at a little bit of a longer term example on an equity. So in this example, we're going to short Vodafone. This chart here is a daily chart. Each bar representing, each candle, should I say, is representing a day. So let's just say in this example here, we'd seen a bit of congestion here during the daily, and we wanted to sort of sell a breakout, thinking that we'd get a little bit more flow to the downside over the next few weeks. So we decided to go short, and selling short obviously means we're going to profit from a fall in the market, and we're going to lose money if the market rises. So we go short Vodafone. The code of Vodafone is VOD. And the price at that moment in time that we go short at is 220p, which is £2.20. Don't forget, in the UK, it's in pence, the quote, rather than in dollars or in pounds, as is in different countries. Specifically, the US, 220 is in dollars. So we decided to sell 10,000 CFD contracts, and that puts us a notional value of £22,000 short on Vodafone. Now, this becomes a personal preference of how you decide to calculate this. You can either calculate it in incremental points moved. So looking at every penny you move, you know that with 10,000 CFDs, that is going to be £100 per point move profit or loss. Or you can use the notional value and say, 10,000 CFDs multiplied by £2.20 is £22,000, and then work out what your price is when you close the short, and then work out the difference. Personal preference. I like to use this way because I think it's easier, and also gives you an easier handle when you're just looking at the chart in a trade as to approximately how much profit or loss you have at that moment in time. So to close a short trade, we're going to buy back the position, we're going to cover the short. So we close it with a buy order, and let's say we come down and we think 200 is a great place to close it. Yes, it might go lower, but we think that's a great sort of 20 points, 20 pence move in the stock. Let's take the profit and go out of there. To cover it, we buy back our 10,000 shares, CFDs, which are obviously mirrored on the underlying with shares, and the result is that we've made 20 pence. So we multiply that. The easy way of doing it is to multiply that 20 pence by the 100, which is the equivalent of our 10,000 CFD contracts, giving us a nice profit on this particular trade over the couple of weeks of £2,000. We have to pay a bit of commission on this because we're getting the market spread, and obviously the broker's providing us a bit with some value, so we've not got much commission. We've got to pay commission. The commission is 0.1% of the total trade value for the buy and the sell, and obviously we're going to pay this as we go into the trade, as we come out of the trade. So as we go into the trade, 10,000 times our £2.20 stake is 22,000, and the commission for that is going to be £22, 0.1% of that total notional value. And as we come out, because the value is slightly less, it's we come out at, what price did we come out on this trade? Came out at £2, 200 pence. Multiply that by our position size, 10,000. That's going to be a total notional value of £20,000. We multiply that by our 0.1% to give us a commission of £20, and that's our exit commission. Add those two together, we've got a total of £42. So, very nice profit on this particular trade in this example. Obviously, if the market had gone against us, we'd gone short and it had gone higher, we would have had a loss on the trade. But in this example, we had a winner. So two ways of doing it. You either do your notional value by multiplying your stake times your CFD contracts, and then your notional value exit with your stake times your CFD contracts, and then take the difference in two. Or you can kind of do this little trick where you just look at how many points movement you've got in your favor or against you, and then multiply that by the kind of stake you've got per incremental point movement. So a couple of trade examples there, one with commission, one without.